After 5 years of trial and error in trading, this is the strategy that I use. This time, I'm revealing and giving everything you might need for free, take you a step by step on everything you should do, different types of entries, as well as what time you should trade this strategy. This video will be your full guide to trade the London Killzone, so make sure to watch the video until the end, as I'll show you how to have access to this free PDF that has everything you need about the strategy. This is Molham, and let's get into the video. Okay guys, so starting with this, and by the way, for the people who don't know me, I've been using this strategy for a few years now, and this is what I look for every day. And even when I started my Discord, I always go into Discord in the London Killzone and I look for the specific setup. And a lot of people sometimes people ask me, "Oh, Mulham, why do you do this? Why do you do this?" So I decided to, explain everything in details and show you my highest probability setup. So I'm having everything on details today. And I also want to make something clear. I've talked about this strategy before, but not in those details. This one is more refined. It's more detailed. The first video actually on my channel is talking about the Asian higher low and looking for the sweep. But this one is very detailed, and we always execute in a specific time window. Now, starting with the timing of this setup, it happened from 1:30 to 3 a.m. Eastern time. That's one thing. So always come at the chart at 1:30, slightly before 1:30, be prepared, do your analysis, mark your point of interest. So we're going to come to the chart 30 minutes before 1:30, so 1 a.m. EST, and we're going to be looking at the Asian session. So the Asian range from 20 until midnight. This is all EST times. All of the times that I mentioned on this video, they're all New York time. So basically, I'll be looking at the Asian range. First of all, I want to see the Asian range being a range and not trending, because this is what it should be. We should be seeing, or we should be having the Asian session as a range, and we don't want to be trending. We want to see this trending so we can actually anticipate a fake out of the range after. So it's very important to only trade a ranging Asian session, okay? Not a trending one, because the probability goes much lower when we have a trending one. It could be any pips. I don't really care about the pips, but I really look for how it looks, right? I want to see a range, highs and lows, and then we're going to be looking for the manipulation here. Now, another thing is I want to be marking the point of interest. So now we know that this is the high of the Asian range, low of the Asian range. Now, I want to go above and below and look for point of interest. Look for either fair value gaps, look for order blocks, look for breaker blocks. So it doesn't really matter what type of point of interest. For me, it's a fair value gap. It's the GOAT of the PD arrays. Now, we'll be looking for a point of interest above or below. Our sponsor, Blue Guardian, is the only firm that gives you a tool to protect yourself from hitting your max daily lows and prevent you from overtrading. And it is very simple to use. They also have a new unlimited time evaluation with low profit targets and no trading days requirement, so you can get funded in the same day. Blue Guardian is a pro firm that I trust. Use the link in the description below and use the code MOLHAM to get 10% off your next Blue Guardian evaluation. If you watch my videos about the daily bias, then sometime we will be ignoring some point of interest and we'll be looking for some specific ones if we know where the direction is. So if I know the daily bias for this day is to go short, then we're going to be waiting for the day to open, and then we're going to wait for price to go up, then come lower, right? So my direction would be going up into this point of interest. If we had a point of interest below here, all the way down, I'm not going to take this one. I'm going to be taking this one. And why? Because my daily bias is bearish. That's why I want to see price going up into a point of interest, then coming lower. You could be actually doing much better if you watch my daily bias videos. And then we're going to be looking for the Asian range to have low resistance liquidity. Now, what is the difference between high resistance liquidity and low resistance liquidity? When we are having simply price going up, taking a high and then coming lower, this level when taken is a high resistance liquidity. So we had a liquidity above, for example, right here, this, we had a liquidity above, it took that liquidity, then that's the high resistance liquidity area now, because we have a high and a higher high. On the other hand, if we only if we had this high all the way here, then we're going to be having a failure swing, and we're going to be having a liquidity and more liquidity. The same thing here. What we're having is the Asian range was actually building liquidity here. So we had a liquidity, then we had a failure swing, basically a low and a higher low. This means we had liquidity and more liquidity here. So we'd be looking for those liquidity to be engineered in the Asian session. So I want to see a low resisted liquidity here. That's going to give me another confluence that, okay, price is going to go to this point of interest, and then the ultimate target would be taking this trend line liquidity or this low resisted liquidity. That's the second thing. Now, at midnight, this is midnight here. At the time, the candle that opens at midnight, I would be marking this level, and I'm going to be taking shorts above this level and longs below this level. Not every time, but when my bias is being, for example, bearish, then I want to see price going above the midnight in order to go short, right? Because it's going to be the best price to short from, and it's going to be basically the general rule, you know, buying low and selling high. So you always buy below the midnight open and sell above the midnight open. So in this case, I'll be marking the midnight open, and if I want to go short, then I'll be looking for price to go into this higher time frame point of interest that is above the midnight, and I'll be entering from here. So that's another confluence that we're going to be taking a look at, right? The midnight open. We want to make sure that we are above the midnight open in order to go short. Now, another thing, and that's one of the most important things that I added to refine this setup. I mean, with the midnight open and with the point of interest, the last thing is the manipulation period. So based on the quarterly theory, we know that even the day has 4 quarters. The first one is being accumulation. The second one is being the manipulation. Now, the second quarter of the day is the London Killzone, or the London session. But the second quarter of the London session itself is this one. From 1:30 a.m. to 3. That's the 90-minute cycle. We have 2 cycles in here. That's where most of the time where the manipulation happens. That's where we're going to be focusing in order to catch the manipulation here. A lot of time, and you're going to see from the chart that the manipulation happens at this time. So if there is any sweep of a high or low, and even if the high of the Asian session was swept before 1:30, that's not going to be valid. We're only going to be looking for the sweep to happen when? At 1:30 or after 1:30 and before 3 a.m. That's where most of the time, especially if you are on Tuesday, that's when the high of the week or the low of the week would be forming. Let's forget about the weekly high or low. This could be also the daily high or low. So we could be forming the high of the day on this time period, on this manipulation, which is the quarter 2. And then we're going to simply look for a lower time frame entry. We're going to go from the higher time frame to the lower time frame and look for any type of entry here. Now, you could be either looking for the liquidity sweep and entering on a turtle sweep entry, or you could wait for the mitigation of another PD array created after price mitigating the higher time frame point of interest. So we could basically enter on the manipulation immediately here with a risky entry, or wait for fair value gap here and enter from it with a mitigation. Those 2 types of entries, those are the main ones. Now, lower time frame entries, it could be a market structure shift. Basically, we had this type of entry, taking a high and also closing below the low. That's a market structure shift. We could be looking for the change in state delivery, which is price delivering the buy program here. And then suddenly, after price reaching a point of interest, we had an engulfing of this candle. Now we have a creation of an order block here. We could be looking for this order block to hold, and this could be an entry. Or simply when price reach this point of interest, we just wait for a creation of a fair value gap. So the first fair value gap that is being created from this point of interest, we could be actually entering from that one. So different types of entries, go with the one that fits you. And you could be entering, as I said, from the mitigation. I mean, usually the mitigation would be the market structure shift. you enter from the mitigation of fair value gap. Change in state delivery would be the turtle soup one. So no wait for the fair value gap. You don't wait. You enter immediately after this candle closure. Or the first fair value gap. This could be also a mitigation entry. Now, what do we target? Simply, we could be looking for any reaction from the midnight. We could take actually some partials here if it's worth it, and then extend all the way to where low resistance liquidity and simply the Asian low. Could be targeting the Asian low, and then we could actually continue to target the previous day low, and then any other point of interest. Depends on the daily bias. You don't want to be overconfident on this. I don't want you to take trades with 10 15 hour. Stick with a good reward to risk. I would say 3 4 5 to 1. Those are very good, but make sure to take some partials on the way. And I think I forgot to mention that we always look for the lower time frame entry after taking the Asian high into a higher time frame point of interest. That's the main thing. We don't take any liquidity sweep. We take ones that are into a higher time frame point of interest, or it could be the 15 minutes. So we are looking for this strategy on the 15 minutes, and I'll be going over the lower time frame too. But 15-minute, we could be looking for the point of interest on the 15-minute, or on the 1 hour, or on the 4 hour. It could be the same time frame or a higher time frame. Everything would be so clear when we go over the chart, going over the example. But make sure that until this point you took notes of all of the checklist, and maybe write it in the comments and I'll tell you if you're doing good. We're going to go over the examples now. Now, starting with the first example, and this example happened about 2 days ago, right? 2 days ago. And I think I did execute this on the Discord with everyone. So basically, as we said, we're starting with the first thing, looking at the Asian session. Is it really that trending? Like, oh, we're going up in expansion? Not really. It's mostly ranging. And if we consider here, this is the logic behind the Asian session and how to look at it. What do we see here? We can see that there is a high, a higher high, and a higher high. Now, again, we had liquidity here, but it's taken. We had a new liquidity here, and it's also taken. Now, looking at the other side, so we looked at the tops. Now at the bottoms, what do we see here? Even from here, right? This low before the Asian session, but then the Asian session, this is the first low. We had liquidity, right? And then we had the second low. And is this a lower low or a higher low? This is a higher low, which means that we have more liquidity here, which means that it's going to be a very nice take profit to place. We could be actually placing our take profit at those lows, as there will be a low resistance liquidity run going over. So now we know that we have this liquidity level and those failure swings, right? This is the ultimate one, and we have those failure swings here. But we can actually extend it to where? To this one, because this is happen on the Asian session, but not the ICT ones, right? So we could be actually targeting this one also. Now, asking ourselves, what is better now? Is it to go short or to go long? We don't know yet, but mainly looking for shorts to target those, right? But we're gonna be marking all of the POIs that we have on both sides. Now, for the longs, we have this point of interest, right? This fair value gap and this order block. So we could be marking this one. And on the upside, what we're having is nothing here. See, we have nothing, maybe this order block, but we have unfilled part of a fair value gap. So you see, we had this fair value gap. We filled this part of the fair value gap all the way here. And now we have this unfilled part as well as this order block. A candle that created a fair value gap is an order block. We'll be looking for this fair value gap and this order block, right? So we had a point of interest above the Asian range, a point of interest below the Asian range. Now, based on what we see, right, we can see that we're looking for the bearish side more. So which means that I want to see price going up, manipulation, and coming lower. Why? Because we see those failure swings. The liquidity is telling us what to take. On the 15 minutes, we are on the 15 minutes. The lower time frame that we're going to be executing the trade could be the 1 minute, 2 minutes, 3 minutes, 5 minutes. Those are the time frames. Now, 1 minute would be too aggressive. 3 minutes would be ideal. 5 minutes would be a little bit too much. Okay. Now, what time do we look for the trades, or we look for the manipulation? Basically, 1:30 to 3:30. Now, all I want to see is a manipulation happening in this point of interest, because this is the only one that we see, this liquidity sweep here or this one would not be valid. And why? What's the reason? Because it's basically before the quarter two. It's before the second quarter that we look for the manipulation. Now we're gonna wait for price to take, for example, this high or this high into the point of interest, right? But basically it needs to take this high in order to reach the point of interest. So playing the price action, you can see that price is going up. Anyone who entered or look for a sweep here on a lower time frame, or whatever it, some people would be forcing it, right? People would think that, oh, now this is the high, now we're coming lower, but it's not really on the the right timing. The right timing is 1:30 to 3:30. That's the time where the high or the low of the day would mostly occur, as well as the manipulation. Now we can see that price is going up. We had a sweep of this high. Now we could simply look for a lower time frame entry on the 2 minutes, 3 minutes, 1 minute. In this case, we're gonna be looking at the 3 minutes. Hopefully on the next example, we're gonna be looking for the 1 minute. So, I'll try to give you all types of time frames and entries. Now, if I want to see a market such a shift, it's gonna be this low, unless we create something like this, a sweep here. Now we have this low, but mainly for now, as of now, we are looking for this low for a market such shift. A change in state delivery, I'll tell you when. Now playing the price action. And remember that if we had a market structure shift here, right? So let's say something like this. And we had a fair value gap here. And then price continued lower and then started going up from here. Are you going to still enter from this fair value gap? Not really. Why? Because we already took the liquidity level. So it's not going to be worth it, and it's going to be much lower probability. Now, let's see what we have. So playing the price action here, and of course, with the help of hindsight, let's see. And there you go. We got the change in state delivery. Simply. And why? Because you see, we're delivering by program, and you see prices getting weaker, and it gets the weakest here, and then simply breaking below, creating this order block. Now price could come here, and this would be our order block. Now, looking at this, you could simply enter from here. That's your changes to delivery entry. Stop loss, I'd say above the point of interest. I'll put it above, and then targeting the low resistance liquidity. That's your first entry. Now, no market structure shift, but then we have another thing here. We have the third type of entry, which is the creation of a fair value gap. So we created a fair value gap here. We could be actually entering from the 50% of the fair value gap. That's another type of entry. Stop loss above the point of interest and then targeting the same. As you see, this one gave us almost 5-1. This is a 3-1. So that's a big difference. And okay, price actually go to the 50% of the fair value gap, started coming lower, and we are still inside of this fair value gap. So this fair value gap, when we actually break below, you could be entering based on the inverse fair value gap. You see how we're having different types of entries here. You use the one that fits you, but mainly the framework that we need to follow is the same. It's the agent session, point of interest, low resistant liquidity, midnight. Actually, midnight open right here. You see how we are above the midnight. This is midnight, right? We opened here. This is our midnight open. This is the level. If we are above, then we go short. And you see, we are above the midnight, we go short. We don't go long here above the midnight. It's not going to make any sense to go long above the midnight. Now, we're coming lower, and we actually break below the fair value gap here. So another type of entry is going below, entering here, and we might have a limit order here also. Now we see playing the price action, we went again into the entry, and then we're starting to come lower all the way, and disrespecting the midnight open, and then taking the liquidity level. You see, we literally went here into the point of interest above the midnight open. We had this clear low resistance liquidity, and we started coming lower from there. Simply, we took the low resistance liquidity. Now, looking at the price action after the end of the day ends here, the daily candle closes here. What we can see is simply you actually caught the high of the day. This was the high of the day because the day started right here, right? And we started going up, got the high of the day, price started coming lower. You took the profit here, but you could have also targeted the previous day low, as I said, on the framework. It's going to give you about 10 to 1, almost 10 to 1, and that's going to be a huge trade, but you always need to take some partials here. So when you take some partials, it's going to go lower than 10 to 1. That's the first example. It happened 2 days. That means this setup is happening a lot. Even recently, like I said, 2 days ago, it's happening with no problem. Now, another example that happened about a month ago, right? And it looked very nice. And why? Because simply what we had is, and if we look on the big picture, we're actually going lower, 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 and now we're going up. We're coming into a point of interest. So we could basically either push up or come lower, and we might be only pushing up here to come lower, right? So we're not really sure about what's going to happen here, but we're going to follow the plan. Now, on the 15 minutes, what do we have? Simply, we're having this low, and we're having equal lows here, actually, almost equal lows. And the upside, we're having high resistance liquidity run. So that's another thing to keep an eye at. We're having this big fair value gap that's partially filled, and we could fill the other part of it. On the upside, I mean, there is nothing here unless we look at the left side. We can actually see that we're having this fair value gap. So there is a fair value gap that is slightly above the agent session high. Now, we're going to be looking also a look at the 1 hour. This is our fair value gap on the 1 hour. And here on the 1 hour, we can see that we're having actually a 1 hour fair value gap here too. So we could refine this. This is the 15-minute fair value gap. We can actually include the 1 hour fair value gap too. So we're having a 1 hour fair value gap here, 1 hour fair value gap, and we're having, this is Wednesday low. This is Wednesday, and we're coming into Thursday now. Now, coming back into the 15 minutes, what time do we look for the manipulation? Or, simply, first of all, is the midnight. So midnight open is right here. This is our midnight open. This is the midnight candle, and this is where the open price, because it went lower. This is the midnight open here. Now, playing the price action, where do we expect the manipulation? Simply at 1:30 to 3:30. There you go. That's the time where we actually expect or anticipate the manipulation in the market to happen. If it happened before, then it's a lower probability one. We always look for the high probability one. Going up, and oh my God, price actually went up, taking the Asian high, but it's before our timing. So we come here at 1:30. This is the time where we look for the manipulation. So this liquidity sweep is not valid, right? We're going to keep playing the price action. We can see that, okay, 1:30 is here. We had a reaction from the point of interest, but the manipulation itself did not happen on the timing. So we had no manipulation here. That's why we look for the manipulation now. So now, do we have a high or low into a point of interest? Yes, we have this high that is created before the manipulation, and we're having this point of interest. So if we actually adjust the point of interest, it's going to be right here, right? Now, going back to the 1 minute in this case, because we took an example on the 3 minutes. This time we're going to take it on the 1 minute, and we can see that we're looking for this level to be taken, this one, into the fair value gap, the hourly and the 15 minute. Now, playing the price action, you see this change in state delivery? It's not valid. Why? Because it happened before the manipulation phase. There was a manipulation here, but not in the second quarter. That's why this change in state delivery is not valid. Now, playing the price action, we're going to be waiting for price to take this high, and then giving us a change in state delivery or market section shift. So you can see, okay, there you go. That's our manipulation. That's our liquidity sweep, and it happened at what time? 1:54. And then there is no change in state delivery as of now. See, we did not close below. Nothing as of now. And I think, it's actually this candle that closed below. So you see, this candle low was closed below with this candle. So that's where we actually enter with the closure of this candle, stop loss above the high. And actually, in this time, we're not going to be able to put it above the point of interest because it's too big. So we're going to have just a room for price to breathe. And then what we're going to target is the Asian low in this case. And you see those equal lows. I mean, there was a a small sweep, but it doesn't take all of the I'll say all of the positions, all of the stop losses. So that's the tab of the trade that we're having. A 6-to-1, a huge one. Now, if you're looking for the market section shift, it's going to be right here. This is too dangerous. Sometime price will go up, take you out, and then come lower. So you could actually look for I would say, the market section shift entry. So let's put this on the side, and let's see if we're having. Okay, there you go. That's a market section shift entry, and we're gonna play the price action. There you go. So we could be actually entering from this fair value gap. This fair value gap could actually enter from it. It aligns with the breakup block too. So just right here, stop loss above the high, right? And then targeting the Asian low. Now, okay, price goes, and even if you wanted to enter on the 50% of the fair value gap also, it could also work. And then price a little bit going up, doesn't sweep the high again, and then coming lower, creating another fair value gap. You could actually have an entry from there, and it's also an inverse fair value gap and a breakup block too. And then started coming lower, 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 all the way to where? To the Asian low, and sweeping that Asian low again and giving you the profit. Two types of entries, both worked very fine. And I think this one was the high of the day. I think so. So 15 minutes. Let's see. We actually took that high, right? This is where the day started, right here, and we started going up. The same thing as what? The last example. It's always like this. We open, we had the manipulation, now we're coming lower to have the manipulation distribution. And a lot of time we have a continuation on the New York kill zone. So if we have the manipulation here in the London kill zone, start coming lower, maybe create a fair value gap here on the London kill zone. When the New York kill zone start, it goes up, comes again here with another manipulation, mitigation of the fair value gap of the London kill zone, and started coming lower. And that's how we create the high of the day. So let's see if this happened here. So we started coming lower. 7 a.m. is right here. This is the start of the London kill zone. I mean, the New York kill zone actually. So we come lower and we create this fair value gap. Actually, there was another entry here and then coming lower. So actually, this was a continuation of the New York. You see, the New York went up to fill a fair value gap on the London kill zone, started coming lower, and it did not take the previous day low in this case. It did not, but maybe in the future. I mean, it doesn't really matter because you already took your partials here. This was a 6-to-1. The changes to delivery entry was 6-to-1, a huge one. And if we actually extend this, it actually made much more. You see? I mean, those are big numbers, but when you're experienced and when you can manage your risk, you'll be able to get something like this. Okay, guys, into the last example, and I really hope that I'm doing a great job explaining this to you, and I was actually able to deliver it in the easiest way. As I said, I've talked about this a lot of the times already, but this time, a lot of details. This is actually Wednesday, Tuesday here. Now we're coming into Wednesday. Midnight open is right here. This is where midnight open is. There you go. So if we go below, then we're going to go long. If we go above, we're going to be going short. But we need to be either above or below the midnight on the 15 minutes. Or, let's go to the 1 hour first. Do we see anything here? Any point of interest? Actually, there's nothing. We had this low, this high. We are inside of a range. We might be actually breaking out above this point or breaking out below this point. We don't know as of now, but we have this high, this low. Those are liquidity levels. We might be broken above. And it looks like there was some news here. Now, on the 15 minutes, it looks a little bit more clear. Why? Because you can see that we're having this fair value gap here that is partially filled, as well as this order block. So we might be having this point of interest, and we adjusted here. We have this liquidity level also, liquidity level that we might be looking for a sweep at. At the top, there is really nothing, but we can see that we're having actually those low resistance liquidity levels. You see liquidity here, much more liquidity, and more liquidity, simply a trend line liquidity. So we might be actually looking for those highs to be taken because it looks like we're having a lot of liquidity here. Also here, there is some liquidity here. It depends on where it's taken. You see, we have more liquidity here, and we have point of interest here. So I might be having something like this, sweep here, but the problem is there is no point of interest all the way here. But we might have also taken those low resistance liquidity into the point of interest and going up to taking all those levels. So we might see how it goes. What time do we look for the trade? 1:30, which is right here, all the way to 3:30, which is right here. So this is the time period or time window that we look for the manipulation. Getting the price action a little bit, we're going up, coming lower, right? There you go. Coming lower here, taking this liquidity level. So it looks like we're actually, you see, we're below the midnight open. We're coming lower. And let me put this on another color. We're below the midnight open and we're coming into a point of interest. So this looks like a very nice or perfect setup actually. So go into the, let's say this time we go to 3 minutes. Okay. We've done one on the 1 minute. So now we're going to the 3 minutes. Now markets actually shift all the way here or all the way here. So you could be actually looking for those. And we're going to be taking all type of entries here. In the price action, looks like we have the change in state delivery. So change in state delivery entry would be here, stop loss all the way below the low, right? And then targeting the agent session, not the agent session in this case, because it's too low, but we have all of those failure swings, right? So we could be actually targeting this level of liquidity all the way there. Now that's the first type of entry. Second type of entry could be, okay, there you go. The fair value gap. This fair value gap, we might actually fill this fair value gap on the future. So that's another type of entry. You might look for this fair value gap to be filled, right? Before taking the liquidity, stop loss below the low, and the same target is going to be in this case 4-1, almost double this one. And we can see that price is actually, okay, it filled the fair value gap, started going up. Is it going to take the, you see, no problem breaking above the midnight open and come and retest it here. So you might actually push up from now. And there you go, taking the liquidity level. Now, this is a perfect example. You see, sniper take profit here. So you might be actually, we might reverse, not really, not reversing from here. And we're coming lower, and then there is the reverse here. Now, just wondering what happened after. Go to the 15 minutes and see what happened after. It looks like prices is going to push. It looks like this point of interest is going to hold and take in what? All of those low resistance here. We had a very big trend line here. We might actually go up and take all of those liquidity. There you go. So we actually swept the stop loss there and then pushing up. Looks like, okay, we go down again. And then, as I said, taking all those low resistance liquidity. So I'm not going to say you should have targeted those. Always be good with what you have and be satisfied. Okay, guys, so that's the end of the video. I wish you nothing but the best. Believe me, if I don't, then I'm not going to make this video. The only thing that I want is for you to be successful. You don't know how happy I get when I see your Discord messages. Oh, Mulham, thank you so much. I get funded, whatever, all those messages, they are my support. They are the only reason that make me post on YouTube. Now, if you want to have access to this PDF in the highest resolution, then make sure to join the Discord. My Discord, it's totally free. Go to Mulham's education channel and you will have access to this PDF. You could upload it, you could print it, no problem with that. But always follow the framework and I wish you the best. You're going to be successful for sure if you follow this and you practice it and you try to backtest it. There's no doubt on this work, no. It all depends on you as of now. Make sure to share this video with your friends, hit the like button, subscribe, and if you think this is beneficial and you learned a lot of stuff, then make sure to leave a comment, with whatever you think about the video. This is Mulham and I will see you in the next video. Bye-bye, fam.